Ready to amplify your trading power on Bybit but ensure how borrowing works? Let's break down the mechanics of Bybit's margin trading so you can understand the platform's interest rates, collateral requirements, and potential risks first. Understand that margin trading allows you to borrow funds from Bybit to increase your trading position beyond your current capital. The borrowing process involves interest. Bybit charges interest on the borrowed amount, and the rates can vary based on the asset you're borrowing and market conditions. Always check the current interest rates before borrowing, which are displayed transparently on the platform. Next, you need to provide collateral. This acts as security for the loan. Your existing assets in your Bybit account, like Bitcoin or Ethereum, can be used as collateral. The amount of collateral required depends on the size of the loan and the volatility of the asset you're trading. It's essential to understand the risks involved. Margin trading amplifies both profits and losses. If the market moves against you, you could face a margin call, meaning you need to add more collateral or risk having your position liquidated. Always use stop-loss orders to manage your risk. Borrowing from Bybit can be a powerful tool, but it requires careful planning and risk management. Understand the interest rates, collateral requirements, and potential risks before diving in. Now you have the knowledge to safely navigate the world of Bybit loans.